Welcome back. Digital investment platform Bitpanda, now valued at $4.1 billion, which is more than triple its last private valuation of $1.2 billion. This coming after it raised $263 million in funding led by Valar Ventures, the venture capital firm co-founded by U.S. tech billionaire Peter Thiel. Joining us now, Bitpanda co-founders and co-CEOs Eric Demuth and Paul Klonchek. Good morning to you both. Congratulations on this latest funding round. Eric, I'll start with you. What will this capital go towards?
Hi. It will go, very boring answer, into expansion, but it's truth. So it's like on the product side expansion, so we work on many different things at the same time. But on the other hand, we're also working into aggressive expansion into different European markets. So yeah. That's the boring but true answer.
All right. And Paul, talk to me a little bit about the Bitpanda platform. Perhaps best known for the crypto trading aspects and the fact that it actually started as a crypto trading company, but you've expanded into precious metals, into stocks and parts of stocks as well. Are you looking to take on Robinhood here?
Hello. So, yes, exactly. We are trying to simplify investing. We really want to bring the topic of investing to everybody in Europe and in the future in the whole world. And it's not taking on certain companies because in Europe, for example, the investment rate of usual people is super low, right? So we are trying to convert really new investors in the market and giving them the best service to start their investment career into stocks and crypto and other funds.
Eric, in Robinhood's S1, they noted that they're expecting a decline in revenue because they expect the interest with regard to cryptocurrency to decline, at least in the near term. Are you expecting the same to be true on your platform as well? And how did that discussion go forward with the recent investors in this latest round?
Well, to everybody new in the crypto area, all companies, welcome to the crypto space. That's normal. So it's a normal up and down. You have markets where it's cooling down. We call it internally the building phase. Now you actually have time to build the stuff. And then you had, for example, the first half of the year, you have the like the bull run, and there it's like firefighting and keeping everything alive. So that's always, everything is very extreme in crypto space. But that's normal. And our investors, it's like the third round we do it together with them. They know. They are in for the long run. They know the inside out the industry, so that's not an issue.
So, Paul, it looks like the company's been profitable for a number of years already. You offer commission-free brokerage. Is this payment for order flow? Is that the basis of the model here, or is it something else?
Yeah, so exactly. We always try to have our business being profitable. So for 5 years, our unit economics are already working in our favor. And on the stocks, we are not using payment for order flow. We are actually trying to have a very fair model with the customers. So we decided on to have a very super low spread so that it's always guaranteed pricing for the users. And we are not selling the data, we are not selling the order flow. And so we can guarantee basically that their orders are executed in the best price that's available on the market with a super low spread on top of it.
So, Eric, how much of the activity is cryptocurrencies versus, for example, fractional stocks or even precious metals, especially when we hear so many comparisons for cryptocurrencies to things like gold? Do you see a lot of cross-pollination there in terms of activity?
So if you will ask me the question in, let's say, 3 months, half a year from now, it's a completely different answer. But for now, we are very new to that game. And especially the combination of 24/7 trading and fractional is completely new for Europe. And this is why our service there is still in beta. And we're still, it's not the final product. So in a few months, it will look completely differently. Therefore, the answer is very clear. Currently, our revenues are by far mostly done by crypto still. This is our bread and butter, and this is also something we are still investing in.
Paul, I just wanted to follow up on something that you mentioned with regard to payment for order flow. You said that you wanted to be more fair to your customer base, and therefore you charge a spread. Have you gotten a sense that customers are willing and would rather pay a spread to trade than rely on payment for order flow, commission-free trading?
I think it's a different issue, right? People want to actually know what they are paying for and how much they are getting end up charged. And if you are just submitting your order into the system and only after then it gets a price, you don't really know what's happening in the meantime. And Bitpanda has a completely different philosophy. We always want to give you a guaranteed price and actually order guarantee, so execution guarantee. And that's just not possible if you're selling actually the order flow and have some big funds then basically try to give you any price that's basically at the disadvantage of your customers. So we really decided against this strategy.
May I just add something here? I also think it's not only on the customer side, but also on the regulatory side. So you already see in Europe that there are regulators that really have a very strong opinion against payment for order flow. They enforce best execution. Others in Europe say, yeah, it's a gray area. But overall, I think when the whole industry picks up and more retail users are entering the market, I think the regulation will get stricter and therefore be more on the let's say protective side for the customers.